All right, so today I'm gonna be what? That made no sense. Today I'm gonna be going over um intermediate level uh uh intermediate level topics. So fibs. We talk a lot about price action, um, entry points, exit points, zones, maybe zones. Probably just for right now, we'll do fibs, price action, entry and exit points, and then I'll do like stop hunt high, stop hunt low, um, just so we don't go over too many things. So just fibs, price action, stop on high, stop on low, and then entry and exit points. For the most part, we're basically just going over how to go on a trade and when to come out, but on a more advanced level. So first things first, let's go ahead and let me share this whole joint. Can y'all see my screen? I don't know why this thing not working. Let me know if y'all can see the screen.
Yeah, I see it.
Okay, cool. All right. Um, so first things first, let me go ahead and let's do fibs first. Yeah, let's do fibs. Um, so fibs, for those who don't know, it's a way to re-enter a trade on retracement, or at least that's how I use it. Um, it's not the easiest if you don't know what you're doing. But if you know how to use fibs, it's a very good way. Like if you miss the entry, if you miss your first snipe, it's so you can get back in the trade without just entering anywhere. Um, so an example of that, let me find an example of that would be like, let's say it was a downtrend, right? And you're trying to you were gonna catch at the top. You're gonna catch at the top of a downtrend and you miss the original sniper. What you're gonna do now, you're going to pull the fibs out and you're basically going to just wait for the retracement to enter again. So you didn't get the best entry, but you got the second best, basically, without just entering anywhere. So let me do the fib is gonna be Fibonacci retracement. You're gonna start it off at the top of basically where it started to drop. So that would be right here. And then you're gonna pull it down to where it right before it started to retrace, before it started to retrace. So we're gonna bring this one down to right here, just like that. Now what you're gonna do now, you're gonna look for it to reject these key fib levels like right here. Sometimes the 38, sometimes. Um, I don't really like using the 88 either. Kind of these three in the middle, 79, 70, and the 62. You're gonna look for some type of rejection on those, just to confirm that okay, this is in fact a retracement and it's not going all the way back up. If it rejects one of these, now you know okay, I can go back in this trade and it's not gonna go all the way back up to where I wanted to enter. So you're gonna look for this type of rejection. So right here, it rejected the 62. Um, once it rejected that 62 fib level, now you're just gonna either enter there if your confidence is a little higher, or if you want to wait till it closes, You can wait till it closes and then enter there. You'll have a little drawdown right here once the next candle opens, but then you're gone basically. And that's basically just so that you're like, let's say you wanted to enter, like we wanted to enter up here, but we missed it. So instead of entering, I forgot I got this. Instead of entering like somewhere around here, we're gonna wait for it to come down and get a precise entry over here. Instead of just entering like anywhere and then catching a bunch of retracement when we don't need to, basically. Another example. Let's do this one. Whoa, what did you just do? Yeah, let's do this one. So we're gonna start it at the top. You don't want to do it at the wick. Do it at like where the candle open / close. So do it right up here. Drag it all the way down to when it started to go back up. We can even do it here. It rejected the 38 twice. You see 2 rejections, just hop in. We're gonna enter on the 38, and you're just gonna take that all the way down. That's literally all it is. In live time, obviously, it's gonna be a little bit harder, just for the simple fact that you're gonna be scared to go in. That's really it. Maybe not on this first rejection, but if you see it reject the 38 fib twice, simply just pull the trigger, go in, put your stop loss right above the rejection, and you'll have maybe a little drawdown. So we put the stop loss right up here. That's about 9 pips. And then you just caught that whole ride down. Enter there, catch it to there, 150 pips. Never broke structure, could have held that all the way down, 200 plus pips. So you could just, this is just so you can have the best possible entry other than the snipe. I'll give you one more example. Let me do one for the uptrend. I don't like that one too much. Let me do, hold on. All right, let's do this one. Started from here. Let's do to here. When it started to go down a little more. It rejected the 38 again, twice. Same thing as last time. Rejected the 38. Now, obviously, if you want to enter here, you're missing a lot. But you're still able to bag this entry because it rejected the 38 fib twice. You're gonna enter here and you're gonna catch this all the way up until you don't need to anymore. So even on this one, let's say we entered on the 38, stop loss above the wick, again 9 pips, take this all the way up, 145. You're still getting the best possible entry without just entering whenever you want, or just, oh, you missed it here, so you're gonna go in right here, and then it's 20 pips drawdown, and then you come out for it just to go back up. So this is just so you can get the best possible entry or a secondary snipe, whatever the case may be. Or if you caught the original snipe and you want to just add another entry, but you want to wait till you have the best possible one. Any questions on Fibs before I move on? I only use Fibs for retracement or second entries or multiple entries. Like if my TP is 100 pips, instead of putting one order, if it retraces at 20 pips, I'm going to put another trade in. So now I have one TP of 100 pips, another TP of 80 pips, and then if it retraces again at 50 pips, now I have another entry there. So it's just a way for you to put in more trades. So instead of bagging 100 pips once, now you have 3 trades in. Each one you can add like a bigger lot size or keep the same lot size, and you're basically just multiplying your money, or not multiplying, but adding on to. So any questions before I move on to that? I'm gonna do we can do price action next. Does everybody understand divergence? Or you guys want me to go over that real quick? We should know divergence though.
You could go over it real quick, Brody.
Yeah, I got you.
Good luck.
I got you. So and this plays very well with what we're about to go over anyways, because divergence plays a very, very big heard and harmonic scale. Yeah. They use divergence a lot for that. So basically divergence is associated with RSI, TSI, like stuff like that. I like the RSI just because it's a little more clean. The RSI is the relative strength index. So basically, that's just going to tell you the strength of the market. For example, prime example. Let me see. Let me see if I can find a clean one. All right, yeah, right here. So basically, where is it? Right here. So the market, what the market makers do, they're going to try and push you. They're going to try and push the market in a way that so that they can make their money. So they're going to try and collect as many contracts as they can. The RSI is going to show you basically like a cheat sheet of what the market's actually doing. So for example, the market right now, this is pushing up. It's going up, it's going up, it's going up. The market makers are going to make you think that it's going to keep on buying. They're pushing the market up. They're pushing the market up. They're trying to get more people to buy it before they drop it all the way down. Now the RSI down here, this is showing that it's going down. That's all divergence is. Divergence is when the RSI is different than what the market is doing. So if this is pushing up, this is just the market makers trying to get more people to buy it, and then this is showing you no, it's actually dropping down. So you can spot that pretty easily once you just train your eye for it. Let me see if I can find find another one for you. Maybe it's very easy to point out, honestly. Once you train your eye for it, a lot of times you'll see a divergent M. Basically, the divergent M is just going to look like this. This will be the first leg. It'll come down. The second leg is going to be higher than the first leg. Now on the RSI, it's going to be like this. So this is going to be pushing up, and then the the M is going to be going down. Same thing with the W. It'll look like this. Then the RSI will look like this. So this will be going up, and this will be going down. Let me see if I can find one for you, though. I definitely want to go over this, though, because it's going to be something that we're going to go over as far as like the next subject. Right here, boom. This W obviously is going down, and then the RSI, this is going up. Very clear. Same thing right here. This is going down. Oh, whoops. This is going down, and then the RSI, it's going up. Or even if it's leveled, it's still not going down. You enter at the end of the divergence some type of price action, and you catch this all the way up. Same thing with this one. This one gave you an engulfing candle right at the end of the divergence. Catch that all the way up to the next engulfing, 150 pips. This one gave you another engulfing, same exact thing. You catch that all the way until like whenever. That kept on going all the way up. Could have rolled this until the next zone, 300, 400 pips easily. I love divergence. It plays a very big part of my trading style. especially because Divergence has a big part to play with price action, which is what we're going over next. Um, Price action is very tricky because there's so many levels to it. But if you can master or at least have a pretty good idea of price action, you can enter on at the best positions. You can catch pretty much anything. So my favorite form of price action, as some of you know, engulfing candles. Um, that's one of my favorites just because it gives it away so much. An engulfing candle is literally just going to be exactly what it sounds like. There's gonna be one candle before it, and then the second candle is gonna engulf the whole thing. The trick about it is it has to be the same price. It's gonna open and close at the same price as the one before it did. So these opened at the same exact price, and then this one engulfed the whole candle. You're gonna enter. You're gonna enter as soon as it engulfs it right here. You're gonna put your stop loss right below it every time. At least that's my strategy for it, and it works out for me pretty well. As soon as it passes it, I'm going in. As far as this example, I wouldn't do 26 pips. I'd probably put it a little closer. Um, but this is also a stronger pair, so I'd probably drop down to the 5 minute or something like that. Same thing with this one. Another engulfing right here. If you missed the first one, could have caught this one. Engulfing, start at the same price. You enter as soon as it passes it. Stop loss right here. Either at the wick or like right below where the previous candle started. I only do the wick if it's close. If it's like a long wick, I'm gonna put it at the where the candle opened. Let me show you one for a downtrend right here. Same exact thing. Open at the same position, and then as soon as it passes it, you're going in. No drawdown at all. Like it just engulfed the whole thing, and then you just ride it all the way down. This one went for 100 pips. Another form of price action that I use, as many of you know, the RYG method. If I can find one, I'm not gonna go too deep into it. Really, the whole thing with price action is just knowing your candles, your candle patterns. You have to really understand wicks. Wicks play a very big part of price action because they tell the whole story of what happened. If you can master wicks, you can make a lot of money. RYG here, RYG here. You definitely want to master wicks though. Candles, you want to know candles too, but I feel like wicks are a lot more important because they're rejecting the price, and that plays a very big part in what the market makers do. Another form that you can do. I mean, there's lots of candle patterns out there that you can use. Railroad patterns, like right here. They opened and closed basically at the same position. Same thing right here. That's just a reversal candle. So if it's going down, it's gonna do that, and then it's gonna go back up. It's not as effective. I mean, it can be, but it's not as strong as like an engulfing. Same thing right here. It was going up, railroad pattern, open and close at the same exact position, started dropping down. You can enter on that wick, on the candle right after, catch it all the way down, 50 pips. Looks like a small move, but this is the bigger pair. Then gave a W, enter on the engulfing, catch it all the way up. Like you really can leverage the market pretty well if you know your candles and your wicks. Emphasis on the wicks though, for sure. What I definitely want to go through with you guys though, I'm not gonna go too deep into it. But I definitely want to at least talk about it a little bit. It's a little bit more advanced, but if you can train your eye for it. So what what this is, I call it a price action zone. So it's just like these zones. So I have my 4 hour zones. But this one is going to be a little better because this is like super like wick entries. So basically what this is, like I said, I'm not going to go too deep into it, but you can like use this a little bit. Um, these wicks, like I said, the wicks tell the story of everything. This is telling you that it's not going above this price at all. It came up here, gave it twice. So let's say it was a little bit more down. It gave it twice. It respected this line, came down, went back up, went like a pip above it, if even that. If even a pip. Yeah, half a pip above it twice. That's telling you that anything above this price is where the market makers have their money. Now, if the market makers have their money up here, what do you think the market's going to do? They're going to drop the market so that they can make their money. They reject this price 1, 2, 3, 4, 5, almost 6 times. They're rejecting this price, showing you that everything above this is straight money for them. They're collecting contracts. They're pushing the market up. They're pushing the market up, pushing the market up. They're showing you that, well, not showing you. They're trying to get more and more retailers to buy this. That's all they're doing. But these wicks are just showing the rejection of that price. So you enter on one of these wicks, you can enter on any of these, literally. Anything. I think I did a live London session. And I had this PA zone out. And as soon as it touches this price, like you can wait until it gets to like the middle if you want to. Like just put it in the middle. As soon as it touches that price, you can enter. Put your stop loss like above the zone if you want to. But this is almost like a guaranteed like wick entry. Almost guaranteed. If it's rejecting, if you can be confident that it's rejecting this price, like I said, you can either wait till it gets to the middle, or you can, as soon as it hits this zone, you can enter and then catch it all the way down. Did the same thing here. It touched this price 3 times. 3 taps for me is more than enough. More than enough. 3 taps, you enter on the third one. You catch that all the way up. Every time. It's rejecting. It's showing you that's going to reject that price. Now, as well as that, there's most times, I'm pretty sure this one was divergent. I'm almost sure. Yeah. This was going down. And then this, obviously, like this is the same price. Now, obviously, there's wicks, candles going up and down. But overall, this is showing you the strength is going down. So this is pushing up, but the strength is going down. And that's why I said divergence plays a very big part in price action, because it's literally showing you what it wants to do. Price action is all about where the price is and where it wants to go. This is trying to show you it wants to go up, but the divergence is giving it away. Everybody understand that a little bit? I don't want to talk too much about the price action zones. It's a little bit more complicated, a little more advanced. But as far as entries, and that's what I was going to go over next, entries and exit points. You're going to want to enter on these wicks if you can. If you cannot, try and look for the engulfment candles, like so. But definitely, like if you can master wicks, you're going to get the best entries possible. You want to look for anything that I just talked about inside of market patterns. M's, W's, inverse head and shoulders, regular head and shoulders, half a Batman, like whatever the case may be. You're going to look for any of those price actions inside of that. So for example, I'm pretty sure, I'm almost positive this right here is an M. Yeah, easily engulfing candle. You're gonna enter on that. So that's what you can use as a confirmation. As far as entering, you can wait for some type of market pattern, and then you can wait for the price action to enter on it, or the 2 wicks like this one that rejected the same exact price. Enter on that. As soon as you see that, you can enter. And if you don't catch that wick entry, do not force a trade. You have to be patient with it. So what you want to do, just wait. It came up, it rejected it. It's gonna come up one more time. If you miss it, it's whatever. Like, you'll catch another trade another day or later in that day, but don't force the trade, because you could have entered for the sell right here, thinking it was gonna drop, and then it came all the way back up, and now you're down. When you could have entered, you could have just waited for the engulfment candle, enter on the next best possible entry. No drawdown, no negative, and then called it all the way down. Same thing with like this W, and I'm pretty sure this W right here, inside of the W, also divergent. Wait for the engulfing candle. Always wait for some type of price action before you enter the trade. You don't want to just enter at any spot there is. Um, Exit points is kind of really based on a few different things. That can be uh, whatever your goal is, like for the day, if you have daily goal, whether if it's like 30 pips, 30% of your account, $30, like whatever your daily goal is, once it hits it, just come out. So let's say we entered here on the engulfing. Once it reaches 30 pips, just come out. Come out there. This just really depends on your discipline. Yeah, you can catch an extra 30, or you can come out when it gets to 30, because you don't know if it's gonna go back up. You don't know if it's gonna come back up, hit your stop loss, or come back up to your entry point instead of just bagging your 30 and getting out. Now you're not making any money. So it's best to just try and be as disciplined as you can. And obviously, it's easier said than done for sure. But if you can master that, you can definitely make money and save money at that. So if it's 30 pips, if it's $30, I like the percentage more, because every day it's going up. If you got 30% yesterday and it was $20, your 30% tomorrow is going to be a lot more than, or not a lot more, but it's going to be more than $20. So I like the percentage more, just because every day it's a growth. Instead of getting $30 every day, and if you hit your goal for the week, you're only making, what is that, like 90, 120. Whereas if it was 30%, it could be 30 Monday, it can be 50 Tuesday, it can be 60, 70. Like every day is gonna go up. That's why I like percentage a little more. And then also pips is good too, because then you can, if it's 30 pips, you can have a standard one day, you can have two standards the next day, or like whatever. So it can go up with that as well. Um, but if you just want a regular dollar amount, like that's cool. So it's either gonna be your daily goal, or it can be your target price. Whereas, for example, that can just be wherever you think the market's going to go. That can depend on a lot of things. Sometimes what I like to do, honestly, I just ride it out until the market breaks structure. So basically what that means is, so for example, this one, this is a downtrend. Instead of coming out at 30 pips at $30, I'm going to come out when this breaks the trend line. So yeah, I could have, like, say we enter on the engulfing, I could have bagged the 30, or I could have waited till there was some type of double bottom and I thought I was going to reverse, or I can just draw the trend line and catch this, either come out here at 100 or wait for it to break structure. I'm bagging 80 pips now. So that's kind of what I like to do. I'm not as disciplined as I want to be, though, obviously. So I'd recommend just having like a daily goal coming out like that. Only thing good about that strategy is, let me show you. You could have, let's say we entered at the top of a downtrend, right? Instead of bagging 20 pips, you could bag like hundreds, just because as long as it never breaks structure, you're in the bag, really. So let's say we caught it up here. Instead of getting 30 pips or 120, you can ride this. It didn't break structure there. Could have came out with at the double bottom at 150 pips, or you just could have came out here 120. That's good because as long as the market stays in structure, you can hold it as long as it wants. If it doesn't break the trend line, it's going to keep dropping or it's going to keep buying until it breaks that trend line or until it hits that zone. Then you can come out because now you know it's going to reverse. So that's kind of my strategy. Like I said, I'm not as disciplined as I should be, which is why I also said it's a lot easier said than done. If you want to just get your 30 pips and get out, then just do that. Everybody understand for the most part that though, before I move on. Or any questions? All right, cool. Oh, stop hunt high, stop hunt low. Very, very, very important. Very important. This has to deal with basically everything that we just talked about: entries, divergence, price action. Like this has to do with all that. A stop hunt high is, let me show you. A stop hunt high and a stop hunt low is going to be basically what it is. It's the market makers taking you out. It's going to hit your stop loss. That's really just like the name, stop hunt high. It's hunting for your stop loss. So let's say we were in, where is the damn thing? Let's say we were in a in a cell. Where is it? I know I oh, here it is. Okay. Let's say we were gonna buy it, right? Let's say we're gonna buy it. We saw this big downtrend, saw this big candle. We know it's gonna reverse, and or no, before this one, or let's say this one. I like this example a little more. I like this example a little more. Oh, let me move this down. All right, so this one. This is going up, higher high, higher low. What this is gonna do, a stop on high is literally gonna come out. Like let's say we were in for the sell because we knew it was gonna drop. There's an M, obviously there's an M right here. If you can see it, clean as day M. Came up, came back down, came up. Obviously, we know it's gonna sell, right? What this is gonna do, they're gonna take you out this sell before it actually drops. Now this stop hunt high, this is GA, so this is probably like 50 pips of wick, 30, 20, 25 pips of straight wick. It rejected that whole candle. That's literally gonna be there just to take you out that trade before it sells. So it's I like them, even if I get taken out, I like them because it's confirming that it's gonna play out, basically. Yeah, you got taken out, but you can enter on this wick. Literally. Once this shoots up, any fast movement you can't really trust for trading. Once this shoots up and you see it start to reject, you can enter as soon as it comes down. Like I've caught wick entries just off of that. It's gonna go up and then it's gonna start to retrace, and you just enter on that. If you miss that one, enter on the engulfing. Just use this as a confirmation that it's actually gonna sell. Same thing with this one. And that has to do with the price action I was talking about earlier with the wicks. This is showing you that anything under this price is where they have their money. So if they have their money under this price, they're going to shoot the market back away from it as far as they can. It came down. It rejected that whole price. You go in and buy it. This is 80 pips of straight rejection. You know they're not putting that anywhere close to that price anytime soon. It came up, came back down. You could have entered on this W and then caught it all the way up. Caught this all the way up here until the forms at M, 130 pips. It didn't touch that price till the next day. Another example. Right here. And this one is good because this formed all the way until a gravestone almost. Same thing, nothing but rejection. 40 pips of straight rejection. As soon as you see it start to retrace, you can enter on this wick. Catch the entry there, put it right above that wick. It's not touching that wick anytime soon. Or that price anytime soon. If you miss this one, enter on the engulfing. Same thing again. Enter on the engulfing, and you catch it all the way down. This move wasn't as big, but you still could have caught 25 pips just off of this, 30 pips off that engulfing by itself. That's your daily goal right there in 15 minutes. Just because you saw a stop hunt high and then enter on the engulfing. Or if you entered on the engulfing, you could have just came out. This whole rejection is your daily goal. Came out 15, 10 minutes and you're out. So stop hunt highs also most times are going to be dealing with divergence as well. So for example, I don't really like this one too much. I think there was one here. Yeah, right here. So same thing. They're pushing the market up, but on the RSI it's going down. Same exact thing. A lot of times stop hunt highs, stop hunt lows, they're gonna be associated with divergence. Like I haven't seen too many times where there wasn't divergence with the stop hunt high or low. So definitely just look for that just to like get an extra confirmation. This one was pushing up, divergence is going down or staying the same. Obvious giveaway. This is 500 pips of straight rejection. Another one right here. Same thing. 600 pips of straight rejection. If you didn't enter on the wick, they gave you an engulfing candle right after. You catch that all the way up, 6,000 pips, just because you saw a stop hunt low. And then it gave a W right after. So if you missed this one, you could enter on the second leg, engulfing right there, engulfing right here. Like it gave you so many options. Same thing with this one. Super, super clean. Obvious M right here. Came up, came back down. It's going to shoot the market up before dropping. This is going up while the divergence is going down. Super, super easy giveaway. Could enter on the wick or could have caught it on the candle after. Like, it doesn't matter. 5,000 pips. Just because you saw M, a stop hunt high, and divergence. You merge all of that together and you leverage it. And this is like simple stuff. Super, super easy. Well, it can be once you train your eyes for it. I'll do one more example. I want one with divergence though. Oh yeah, right here, perfect. This is what the 1 hour. This is beautiful. Super, super easy, bro. And so basically same thing. This is shooting the market up. Hold on. False, yeah, fast moves are always false. Facts. Super, super facts. Big rejections. I love them. So this is shooting the market up. Obviously, you can see that it's pushing up. 1, 2, 3 push divergence. Pushed up one time, came down. Pushed up second time, came down. pushed up a 3 time, but this one it gave you a stop hunt high, and then the divergence is going down the whole time. 3 pushes is all you need. 1, 2, 3 gave you a stop hunt high, going. If you missed on the wick, engulfing again right after. That's 3 examples already of a stop hunt high associated with engulfing right after with divergence. You catch this, let's say we enter on the engulfing. Catch this until it forms this W, 120 something pips. Easy. Same thing with the stop hunt low. Came down and rejected this price twice. This one came down a little more. Enter on the wick. You catch this until it hits the trend line, 100 pips. Like it's gonna do this all over the market. There's another one right here. At the H4 zone, it rejected this whole thing. This is 40 pips, 45 pips of straight rejection with an engulfing again. At an H4 zone, enter on that. You could catch that all the way down, 100 pips in an hour. Easy. I think, yeah, another one with divergence right here. This is going down. W, obvious W, while right here, it's going up. Gave you a stop hunt low on the second leg. Gave it away. W, 1 confirmation. Divergence, 2nd confirmation. Stop hunt low, 3rd confirmation. You enter. You catch that all the way up. And I don't have it dragged back, but this one goes all the way back, and it's at an H4 zone. That's 4 confirmations. You catch that all the way up here, 300, 400 pips, easy. Just for these are basic confirmations too. Divergence, you learn that damn near when you first get in. W's, zones, like these are fundamental things that you learn when you first start. Just leveraged up to the point where now you're making a lot of money off of it. Another stop hunt low right here. Stop hunt high. We went over that one. Let me do one more. Everybody kind of understand a little bit though. Let me know if I'm doing my job right. Another one right here. Cashed out all the way up. Not a big move, but big enough. 75 pips. Stop hunt high right here. Cashed all the way down to whatever, how far that went. W right here. Could have entered on the second leg, or he could have waited. It gave you like this is it's super easy. All you have to know is the mindset of the market makers, and you can make money. This gave you this gave you a W. Everybody knows a W is gonna buy. So what they do, you're gonna enter on this engulfing. Then they're gonna give you a stop hunt low to literally take you out before it buys. I guarantee you, when this opened, it dropped all the way down, took everybody out that was buying to collect more contracts, then it bought. Every time. Every single time. 13 pips. This is UJ. It's a little weaker, but still, that's an obvious stop hunt low. And there's a RYG right here before it on the second leg as well. So that's 2 confirmations that it's going to buy. Gave you RYG and it's a W. All they're doing is taking you out this trade before you go in. I mean, after you go in. Super obvious. All you have to do is know the mindset behind the market makers. What's the easiest way for you to catch wick entries when the candle wick is forming? The easiest way, PTT. That's all I can really say. When you see it happening, just pull the trigger. When it's forming, it's going to be very hard to catch it. Really, I guess when you see the rejection. But this kind of, that's associated with just kind of practice and seeing it multiple times. So for example, like if I saw that because I know the RYG method so well, if I saw the RYG, I'm already expecting a possibility of a stop hunt high possibly, a stop hunt low possibly happening. So when I go in, if I see me taken out of the trade, it hits my stop loss, I'm going in on this wick. Just because I know that it's probably going to be a stop hunt low, just to take me out. So now I'm just entering up here. So it's really just practice and seeing it multiple times. But it's still associated with kind of the confidence of just going in and failing. Once you fail a few times, you're gonna learn that UJ is also a border RYG on the HR. Yeah, this one has RYGs all over the place too. RYG right here, right here, right here. Um, this is throwing price action all over the place. But yeah, it's just kind of just going in, messing up a few times, and just learning. Once you see it, you're gonna automatically know. Because I know stop hunt lows and stop hunt highs so well, and I know price action so well. If I saw the candle forming, I'm entering probably while the candle is still red, and then it's gonna reject, and then I'm gonna be on the wick while it reverses. Yeah, exactly. RYG, boom. Probably on the H4. Yeah. Oh no, almost. Um, but yeah, it's just practicing and messing up a few times. Um, yeah. Let me see. We went over everything: stop hunt low, stop hunt high, entry point, price action, fibs. Let me go ahead and see if I can merge all that together now. Let me see how sick I am. Where's the? That's not it. Here it is, right here. So came down W. You're gonna enter on the wick. Let's say you missed the wick, right? But okay, actually no. Let's say we caught the wick. We caught the wick. Um, let's say we entered like right here. Let's say you wanna go in a second time, put another entry. I don't think this one hit the fib level. Nah, it didn't. But what it did do, and this is why it's a little more advanced, you just really have to practice. It rejected this price 3 times. It didn't touch the fib level, no. But when you see 3 rejections like this, it gave you 2 dojis back to back. Enter on that, take it all the way up. So you could have entered here, then you could have placed another entry there. Let me do bullet with yeah. I don't know all them names, but yeah, that. I'm pretty sure this is an M up here. Yeah, right here. Um, engulfing candle. Let's say we enter on engulfing on the second leg of the M. Put our stop loss right here, and then we want to do a second entry. We're gonna wait for it to reject this 38. It rejected it twice. It didn't touch it, but it rejected it twice. It didn't hit that fib level. It touched it 2 times, 2 rejections. Go in, catch the rest down. Once you hit 30 pips or whatever your goal is, come out. Once it breaks structure, come out for sure when it breaks structure. This one, you could honestly, you can drag this one all the way down, come out like up here. And then it came back in. I don't know, you can, it's really up to you. But this is the 5-minute. Hold up. That's not valid. It is, but it's not. Let's do. Yeah, it's still valid. Same spot. Come out as soon as it breaks structure. When the trend line is broken, when it hits the next zone, or if you're at your daily goal, just come out the trade. When it hits the 38 fib, the 62, the 70, 79 come out. I mean, not come out. Go in for a second trade. Everything really just depends on pulling the trigger. When you see it happening, like we're going over the stuff, you're learning it. All you have to do is apply it. When you see it happening, there's gonna be something in your mind telling you, like, damn, like I know this is a stop hunt high, but should I go in? I don't want to get taken out. I don't want to lose money. Just go in. You know you came into this business with the mindset of, okay, I might lose money. So don't be scared to go in a trade now because you might lose money. I'm teaching you this. I'm showing you, apply it to the market. If you fail, figure out what you did wrong. So then the next time you go in, you're going to make money. That's how any trader learns. That's how I learned. Blowing accounts, stop losses getting hit, like that's how you learn. And that's why I tell people I applaud all those failures. That's the only way you're going to learn trading. Any trader you talk to has blown at least 3 accounts. You're going to lose plenty of times before you start winning. You're going to lose hundreds of dollars before you start making thousands. Like, it's all a part of it. Don't be afraid to lose money. But the most important thing is really just pulling the trigger. Having the confidence that, okay, I was taught this. I learned this. I tried it on the demo a few times. It worked. I see it happening live. What am I going to do? Go on the trade. If your stop loss gets hit, don't discourage yourself. Like, damn, what did I do wrong? Like, just figure out what you did wrong, but don't beat yourself up. Don't beat yourself up. Scared money don't make money, and that's a fact. Any questions though? I pretty much went over everything. Any questions? If you want me to go over something before we wrap it up, let me know. No, we're all good. Everybody understands pretty much, has a pretty good idea. What are your fib settings? 38, 62, 70, 79. I have it. I have a screenshot. I'll send it to you. Can I extend this a little bit though? No, I can't. 38.2, 62, 70.5, 79, 88, and then obviously 100, 0. But the most important ones to me, I like the 38, honestly. I like the 38. The 62 is probably the most important to me, and then the 70. If it hits the 79, like, that's cool too. But I think these 3 are probably the most important to me. But yeah, those are my fib settings. I'll send you the screenshot as well. But everybody understand pretty much everything. I want to make sure that, like, you guys have a pretty good understanding. Or if I did miss something, or if you didn't understand something fully, I can explain it a little better. So please let me know if you guys understand it. Because then this whole call would be pointless if we were on here for an hour and you guys still don't understand. Diana says yes, thank you. Everybody else, we're good. Don't be strangers, we're family. Y'all been asking for this call for a while now. Jasmine says yes, thank you. All right, cool. I'm gonna take that as a yes. All right, cool. Bet. I have the video recorded. If you want it, I'll send it to you. I'm pretty sure there's gonna be a lot of people asking for it. Send me your Telegram just so you can basically study it, rewind it, pause if you need to. That's basically what I do. I'll send it to you. Just drop the Telegram, and I got you. With that being said, thank you guys for pulling up. I'm gonna go ahead and wrap this thing up, and then I'll see you guys. Can you send it? Can you send it? Private Discord only. Only Telegram, bro. Just DM me on Discord.